Welcome to TheoTrade. This is Don Kaufman. It's March 26th, 2025. Just about 40 minutes to go to the cash close here on this Wednesday afternoon. S&P's taken a hit. Volatility is so very much back, and we were well positioned for just that. All right, let's get right down to business here, of course, in this TheoTrade evening video. So the S&Ps here with still plenty of time on the clock. They're down about 76 handles, amounts to about 1.3%. Let's not get too crazy there. Nasdaq, however, not faring nearly as well. Look, the sell side activity that originated this morning, it came from some of the bigger players out there. Nvidia, for example, saw sell side activity right out of the gate this morning. Tesla, after having a rocking couple of days, I mean, this is the quintessential rip your face off rally, back into some sell side activity. But here's the thing, that was early. And then, okay, the dominoes simply started to fall. You had Meta right out of the gate, sell side, right? And then Google throughout the course of the day, just some like very steady sell side activity. But what actually occurred, a little bit alarming here, is it started to tip some of the other major sectors. One, of course, being the financials. Look at the financials this morning, which actually had a huge bid under them, okay? They gave back some of the gains, but I mean, overall, the financials still down about 0.5%. And this is a little bit disconcerting, okay? So yeah, volatility comes back. Let's push that aside for just a moment. What I don't like about the volatility coming back right now is it's still like sector rotation. It's very discombobulated. It's not, this full court press to the downside. And the reason, and I have continually said this from the onset of the volatility a couple of weeks ago, that you need to see what? Higher degrees of correlation. But what we're seeing right now, it's anything but high degrees of correlation. Go a little deeper. Let's actually open up, for instance, the energy sector, which ironically is still up on the trading session. So we're still seeing attempts, if you will. Let's throw some money towards Walmart. Walmart, by the way, didn't participate in the rally at all. This thing is, getting pummeled, but it's flat on the day. You can see stuff like Starbucks, okay? It's got a bid under it. Now forget about news. I don't care what you think about any of these underlyings. The point that I am trying, okay, to make, and I continually will make, is right here. Look at your S&P 100, and I'm going to freeze the screen right now just so everybody get a good take. Recognize that the advanced decline line is 50-50. And the cautious area of that is, from my perspective, you got 49 other things that you could have sold today. Obviously, we're not getting, if you will, that full court press. When I talk about a full court press, what I mean by that is like, look, everybody just starts selling everything, like indiscriminate sell side activity. You need it, okay? And the argument that I continually will make is until you see that, where it's literally, when I say this indiscriminate sell side activity, I'm talking about people throwing the towel in, okay? Right now, it's like, let's rotate out of tech because tech is not doing so well on a year-to-date basis, but oh yeah, you know what? Maybe we can tuck some money in the financials. Did everybody not see the financials? The comeback story in the financials is huge, man, huge. I mean, look at this thing. It's beyond a 50% retracement, right? So huge comeback in the financials. Meanwhile, you look at stuff like Nvidia, well, it never really had a comeback, okay? Tesla, 2 days a bid and all of a sudden some sell side activity. The point that I'm making is, again, we're still seeing, okay, really asset allocation and areas that, money managers are out there like, I could still buy the financials and kind of squeak by. And that, again, it becomes very, very disconcerting because, as I said to you, you have to see markets kind of throw in the towel. And when you think about, the financials, they're like, well, I can come up with reasons they're up. That doesn't matter. First of all, can you really come up with reasons? What, they're looking at lower interest rates in the future, maybe a little stimulus package. But if there was a stimulus package, wouldn't technology do a little bit better over there? Look, yeah, you can buy into any story that you want, but if you want this volatility to stop, okay, you need to see, one of the elements, if you will, of capitulation. And one of the elements of capitulation is just simply not there. All right, enough of the correlation discussion. And I think people get it. Maybe you don't get it, but you will. Oh, you will. Next on the docket, I want to look down at volatility. So volatility, well, the VIX had actually crushed considerably. And, everybody's like, oh, okay, the pressure's off over here. Stop looking at VIX. And I said that on the weekend update, and I said it last Wednesday night's video. Got to start looking at the volatility futures, because the volatility futures told a very different story. The vol futures, and again, I'm going to freeze the screen. There's nothing like freezing the screen when the S&Ps are down like 1%. You're like, don't do that. So I freeze the screen because I want you to see, okay, what is a very, very mild contango. And what that basically means is that April is ever so slightly below May, is ever so slightly below June. Basically, when the marketplace rallied, okay, yeah, volatility dropped, but we never got out, if you will, okay, of that like blaring warning zone. And that is what I'm looking at expressly in these volatility futures. And that's why, here at TheoTrade, I did a full-blown course on these last Friday. The read on the volatility futures, okay, was very simply put, right? You ain't out of the woods yet, okay? You can only see forest around you. That's volatility, right? And it was a warning shot. Of course, people then turned around and they pointed towards the VVIX and they go, but Don, the VVIX got crushed. The VVIX should have been crushed. What the VVIX represents is institutional, okay, hedging activity. So when you need a hedge, the VVIX goes up. Why? Because there's all this wild buy-side activity of call options in VIX. The VVIX goes up. And all of a sudden, those hedges start to see degrees of profitability. So what does everybody do when their hedges are profitable? They unload the hedges, which ultimately drops the VVIX like a rock. So then we cycle back up. But just because the VVIX drops, okay, yes, some of the firms are relinquishing their hedges, but the hedges actually worked in many circumstances. So they get out of the hedges and then they look to re-up again later. But just because it drops does not, okay, don't get off your game. This doesn't signal like the all clear. You need about 19 trading sessions. After VVIX is above 110, you need about 19 trading sessions below that 110 region to start to sound the all clear. So the read on the VVIX for most people is just flat out wrong. All right, so here we are, as I said, back to some degrees of volatility. I do hope that many of you were able to trade with us. We took some short positions, okay, not only on an intraday basis. Today, I actually took one in JP Morgan, scored about 110% gain on JP Morgan on an intraday basis. But I also took a position on Meta, okay, in the midst of the buy side. I was able to actually catch Meta. This one is well profitable and very, very close to an exit. All right, so using, and really what I want to stress in there is I'm using the bid back under the marketplace, okay, for an opportunity for a reload. And I did just that. And where are we now? Some sell side again. Let's look though at the bigger picture, because I always want to leave you guys with, on the Wednesday night video, a little bit of like orientation. Where are we on the week? And what can we kind of expect for Thursday and Friday, right? So obviously this week, buy side right out of the gate on Monday, we literally hit the upper edge, okay, of the expected move in the SPX. So the SPX this week, I'll just round it. It's basically a $110 expected move, okay? So 110 equals the expected move. Boom, we're there. Like Monday, we're home. All day Tuesday, what did we do? You know, I actually have to go to an intraday chart because this one is absolutely shocking. On Tuesday, we closed on my upper edge of the expected move, right? If you're not looking at this indicator, you're missing out. I mean, literally closed on a line, okay, that I drew last Friday. Today, where are we? Some sell side activity. However, let's not get crazy. Before you get too crazy, we're still up technically on the week. Moreover, if you look at the QQQ, all right, so the Nasdaq, where is it on the week? Okay, it too is slightly higher. So even after we're seeing like, okay, volatility is coming back, we're rocking once again, but the marketplace, okay, is still a little bit higher on the week. So then the big question is, well, what's the remainder of this week going to look like? For that, this is where, you know, okay, we had this $110 expected move. You see volatility move back into a very threatening posture. This is where you can cruise over to the trade tab, okay? And don't listen to me, you listen to that expected move. That expected move for the next 2 trading sessions is 72. One of the reasons, you still have PCE data ahead of us, right? And that's what the Fed always calls their indicator of choice. Nevertheless, okay, it's still rather serious out there, okay? I think we're going to possibly, you know, front run April 2nd. Everybody keeps talking about in the tariffs, and that's probably what this marketplace is doing right now, is front running some of that volatility, okay? Let's get, you know, scared. Let's get wild over here. Look, you need to anticipate, okay, some really big moves in the next 2 trading sessions. You know, this entire week was expecting a $110 move with only 2 days left. We're now up to, here you go, now it's a $73 move. So anticipate a lot more of this. What you have to do though with your positions, okay, be a little patient. If you were able, okay, to short this most recent rally, phenomenal. But now, okay, let some of this volatility play out. We'll look to either sell some premium, okay? If there's continued sell side activity, we'll look to sell some premium. If we rally back up, okay, we'll reload again. Look, this is two-sided trade, people. This is what we live for. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.